Hello everybody, my name is Mark. Welcome to another investing video. In this video, I thought I would go ahead and go over the way that I trade my options. And right now at this point in time, I am just straight up selling put options. I don't own any stock, no option callers, cover calls, nothing, just selling puts. Reason being, I have no idea what the market's going to do after the election, and I feel that it is a lot safer to sell out of the money puts than to be holding stocks, even if it's covered calls or option callers. And so this is a live video. This is not live streaming, but it's live in the sense that I'm doing this in real time as far as my time. This is not a rehearsed video. This is me doing it as is. So let's go ahead and get into the way that I trade my options. And so first thing I do is I am on my trusty website, barchart.com, and I'm going to look at the options with the high implied volatility. These kind of options are risky, and and a little disclaimer here, I'm not a financial advisor. Trade at your own risk. When you trade these kind of options, there is an inherent risk when options are high implied volatility. That means there is an inherent risk in owning the stock or the underlying stock value. So these are the options with high implied volatility, and you can see right here the green numbers. I apologize for all these ads. You can see all of these options are popping. 200% would be triple and higher. So I start at the top and I look at the strike prices. So this one, I'm not going to be selling any options that have a strike price of 64 cents. That's a little bit out of my risk tolerance. But SPI, most of these stocks I've never even heard of. And actually, I made a mistake. That's the price of the option, not the strike. The strike is $1. It's still out of my price range. The stock itself is a penny stock. I don't want to go that low. But this SPI one looks interesting. I've never heard of it. So let's check it out and see what it is. So now I go to my TD Ameritrade and I'm going to put in SPI like this. And I'm going to see what their options are going for. The next thing I look at is liquidity. And I need to go back and look at the expiration date of that particular option. And it's a call. It's a $17.50 strike, 11.20. So let's take a look at that call. And also, I like to see if there's other options on the same stock. So there's another call here. This is a $10 call. So seems like people are expecting a big move. I'm probably not going to trade this one. But just for fun, let's look at the option and see what it's paying. So again, what was that expiration date? It was 11/20, 11/20. So it looks like 11/20 is the expiration date I'm going to look at. So 11/20. View the option chain here, and the 1750 is the bid. So it seems like there's okay liquidity. And the $10 call for 36 days, that's a little bit too risky for me. My risk tolerance is 2%. And since I got about 29 grand here in this account, the highest I'll go is $600. And so I'm not willing to make an $800 trade on that. I could do a spread, but I prefer just to straight up sell put. So moving on. NAK, excuse me, I've already looked at this stock and I already know that I don't want to trade it, so I'm not even going to get into this. AKBA, never heard of it. Calls, I really only want to trade puts right now, so I'll go down to this one, REV, and it's a $5 put all the way out to February. So let's look at that one. $5 put all the way out to February. So let's go back to my Ameritrade. REV. Looks like there's really not much going on today for myself, for my particular trading. So it's highly likely that I'm not even going to make a trade today. So here's February, and I forgot what was the strike price of that. it was a $5 strike price. So looking at the $5 strikes, that's interesting. It's got high liquidity. It's got a bid of 180. It falls in my risk tolerance. So now I'm going to go ahead and go to the chart, go to the trading view here and put in REV, and just to see how stable, what kind of price stability this particular stock is. And so let's go ahead and look at the chart here. And the first thing I do, it is trending down, so that's a concern for me. So right off the bat, I'm inclined not to touch this. But it looks like it's been around forever, and it's Revlon. Okay, well, didn't know that. So let's go ahead and look at the fundamentals of Revlon. Beauty and personal care products. So they're not doing good, but Revlon's been around forever. So now I need to find out why they're trending down and what's going on. So reading the news here, I see mainly I'm looking for news about bankruptcies, fraud, that kind of stuff. So first one says withdraw. I can't even make heads or tails of this. Consent solicitations. Yeah. And then the next one announces extension, same thing. Okay, downgrade, modifications, 400 million. Okay, so they got penalty. Okay, here's a fine for ongoing. So it seems like they have some legal problems. So I want to go back to the chart one more time and make one final guess before I come up with a final verdict if I'm actually going to sell this put. So it looks like that and this is a 5 years chart, so they're trending down in the last 5 years. And how fast are they trending? So let me draw my pattern here. That is a range from June 2017 up and down and up and down to, so that's the 3 years. And now that it looks like they're breaking into a new lower trend. So I might trade this, but because I would possibly consider trading this, but because the put is all the way out to February, I'm inclined not to do it. I don't like going out more than 60 days when I'm selling the puts here. So, okay, so this one is out, but I was close. I almost did it. And I would not judge or criticize anybody if they want to take that risk. If you want to sell the $5 put, the return on the money looks like almost 40%. So that's some pretty insane premium, right? 500, 10% is 50. Their last is $2. So that's a 40% return on a $5 put. So that's some pretty crazy premium. And again, it's risky to trade these kind of stocks, but it is potentially profitable. And since I believe that this kind of option trading is a numbers game, you're going to hit some, you're going to miss some. So even now, I'm still tempted to trade it, but I'm not going to. I'm going to wait until possibly it formulates its new trend. Could it actually go all the way down? And by the way, if I were to sell this put, sorry, wrong website. If I were to sell this put, my break even would be 5 minus the premium. So let's say I got it at the bid 180. That means that as long as Revlon does not go below $3.20, then I would break even, and maybe I could even do a wheel, right? But boy, I didn't have a lot of luck in the CRBP pharmaceutical stock, did I? So I'm kind of disinclined to do that. And the wheel is not my strategy I'm doing. I'm just straight up selling puts. So I don't think I'm going to do it. I think I'm going to hold off. But this stock did make my watch list. So I will add it to my watch list, and I'll move on to see if there's anything else. I don't want to go below 200 here. So the lowest I'll go is this one, TRXC. It's a penny stock, not going to touch it. All right, so next one is this NAK. Again, I've already checked into that stock previous days and weeks, so I'm not going to look at it. VXRT, and looks like they're doing calls. So I'm just interested in selling puts. Nothing against the calls. You can do spreads and stuff like that, but I'm just selling puts, and that's my game, and that's what I do. So every day I do this for a little bit, maybe 10-15 minutes a day. I don't spend too long doing this because it doesn't take very long. I just go through the options that are popping and I check them out. If something looks interesting, if the option shows some good liquidity, open interest, also if the company or the stock shows some good price stability. I think Revlon is a very stable stock, but it seems like because they're trending down. I do like to pay attention to the price action, so I'm going to avoid this stock. And it looks like that I'm not going to make a trade today. Many days I do this, I just don't do anything. If there's anything I've learned when you get into this stuff, sometimes the best thing you do is just don't do a darn thing and wait for a better day for a better opportunity. So that's pretty much it. That's my methodology right now. Uh, in the past, and this year in particular, I was doing covered calls, and I was betting that the economy was going to open up, the COVID was going to pass, and that didn't happen. So I've had a pretty bad year. I think I'm down like 9% for the year. I'm down several $1,000s. I think I'm down $6,000 or $7,000. I haven't even checked. Uh, I've had a very bad year. So, but recently I have changed. I've gotten away from all that and I've gotten into selling puts. And so I predict better days in the future for myself. I think it's very important to choose the appropriate option trading or investing strategy given the market conditions. So that's it for this video. Thank you for watching. Any questions or comments, leave it in the comments. I'll see you in the next video. Have a good day. Ciao.